coming tops of Nigeria, the biggest economy on the continent, where you are. What exactly could have worked for us and much more over and above Nigeria in these rankings? Because you know this Nigerian economy very well.
Yes. All right. Thank you. Thank you very much, Mr. Okanse. I think a number of factors. First and foremost, this study is looking at investment attractiveness. So it's more of a projection, right? So it's not actual. If you look at last year, 2020, and look at FDI destinations, Egypt came first. And if you look at this ranking, Egypt retains its position as the most attractive for 2021 going forward. But Nigeria came second last year, and followed by South Africa third, and Ghana was fifth. So clearly, there's a difference between where the foreign direct investment has gone in the immediate past and where we think it will go this year. Now, a number of factors, if you read the article, all right, were taken into consideration, mainly the impact of COVID-19, because that's the immediate shock that we've seen. So one of the major factors they considered was going into the pandemic, how were the nations performing in terms of the level of economic activity? So let me do a simple comparative analysis between Ghana and Nigeria, because those are the two countries that I'm very familiar with. Ghana ended 2019 with a GDP growth rate of around 6.5%. Nigeria was around 2.2%, right? Nigeria was just about getting out of a recession in 2016, so it had a relatively fragile economy. Then you went into this recession, and Nigeria ended 2020 on a negative. In fact, we had a recession. We had two consecutive quarters of contractions. Quarter two of 2020, we had over 6% contraction, which is negative growth rate. Quarter three, a negative 3.1%, which is a negative contraction. So clearly, Nigeria was hard hit by this pandemic compared to Ghana. So that was also taken into consideration. Ghana ended the year on a positive note, 0.4%, way lower than the 6.5 they had the preceding year, but it wasn't a contraction. Now, the next thing they looked at was the projection for 2021. Based on projections made by a number of these international financial institutions, Ghana is projected to end 2021 around 4.1% or 4.2%. Most projections for Nigeria hovers around 1.5% to 2.5%, depending on who you're looking at. Africa Development thinks it's going to be 1.5%. Some of the international financial institutions are looking around 2%. So if you look at this data, all right, it's fair to say that if I'm an investor, I will find Ghana attractive, at least looking at the economic activities. But there are other factors that they did consider, right? How the various countries dealt with the pandemic itself. Ghana has been touted to be one of the nations that basically handled the pandemic much better and seems to have gotten out of it on a good footing. So that was another major factor that was considered. The other thing that is very important is the structural change of the economy. When Nigeria went into a recession in 2016, one of the things that Nigeria decided to focus on was how to diversify away from the overdependence on the export of crude oil as a major source of foreign exchange income. As of today, we've not been able to successfully do that. So if you look at the foreign exchange market, we have a lot of shortage of forex and volatility. There's been high depreciation or devaluation of the currency. So all these factors, all right, can come into play in the decision to make in terms of attractiveness. But I think one of the most important factors that wasn't maybe captured in this document as much is the role of the Africa Continental Free Trade Agreement.
Right.
One of the biggest competitive advantages that Nigeria will always have against its neighboring countries is the size of its market, population size and purchasing power. There's always going to be large demand. But with the AFCA, what it then means is I could actually make a foreign direct investment in Ghana and still access the Nigerian market, which means I'm going to do a comparative analysis in terms of my cost of production in order to see which destination will be more feasible in terms of my bottom line. So I think some of these factors are playing in the hands of countries such as Ghana compared to our regional giant Nigeria. So am I too surprised? Not necessarily. It's basically a forecast. I'm looking at potential attractiveness in terms of destination foreign direct investment. It might not necessarily mean that Ghana will come up tops in terms of where this foreign direct investment actually land by the end of 2021. If 2020 was anything to write by, Nigeria had a higher foreign direct investment compared to Ghana. But clearly, there are some factors that inure to the benefit of Ghana in terms of its attractiveness in West Africa.
And it's important that we understand, and just as you have done, a clear analysis of the implications of this ranking, and then also what exactly it means in terms of its assessment on the definition of our investment climate in itself. Because I was trying to understand what exactly, apart from the COVID impact, did Nigeria not do that Ghana did, which obviously could have worked for this country in terms of the projections that we are seeing and the factors that this particular report took into consideration in making such projections? Dr. Bamfo.
Yeah, I think I've mentioned a number of those factors, but I think one of the major ones for me is, see, we all are trying to make a case, all right, that we've created an enabling environment for investors to come in, make investments for mutual benefit to both the investor and the government or the state. So it begs the question, what have you done in order to create that enabling environment? One area we all know in Nigeria that needs a lot of work on is, the power crisis and the significant infrastructure deficit, as well as the gridlock at the ports. There are some critical factors that we all know that if Nigeria gets right, there wouldn't be much competition across Africa. But it's one thing saying that you hope to get it right, and it's another thing whether you've gotten it right or not. So I believe that if Nigeria were to deal with the power situation, which has been endemic for a while, which is a major, input cost, especially for those in production, all right? If they deal with the gridlock, because there's a lot of importation, whether you're in the manufacturing space or what have you, there's going to be importation and there's a need for some efficiency at the ports, and if you deal with the infrastructure deficit, roads and what have you, then clearly you've created an enabling environment for foreign direct investment to come in and really maximize opportunities that is created. I think those are areas that, and Nigeria is lacking, and I think Ghana is doing a much better job compared to Nigeria in that space. So we've seen a number of foreign direct investments, even the automobile industry, pick Ghana over Nigeria in terms of initial destination. It's a sign of the fact that it seems Ghana is doing a much better job in an enabling environment for foreign direct investment, especially in the tangible goods space where, production, manufacturing, what have you. But that said,
okay,
space.
Hello, Doc. Okay, so that's
are the leaders,
So, Dr. Bamfo, so for you, even though Nigeria is not even in the first 10 best destinations to invest in Africa per these projections, okay? I mean, because after Ghana, there's the likes of Mauritius, Cote d'Ivoire, Kenya, Tanzania, all coming before Nigeria. It doesn't surprise you still per these particular factors that you have identified.
So as I said, it's when you say where it's attractive and depend on the factors you focus on, then for me, it might not be too surprising because there's so much that is hinged on the impact of the pandemic in this assessment. So clearly, normal times when things normalize, will those factors still be the major factors under consideration for attractiveness? Okay. So for me, we need to understand the purpose of the exercise. What RMB tried to do was look at what factors in their view, after we've come up from a major exogenous shock like the pandemic that became endogenous due to lockdowns, okay, and how investors are going to look at these various destinations for investment. So from that perspective, and the fact that Nigeria was already struggling with a prior recession in 2016, was just about getting on its feet and got another recession. All those factors went against Nigeria in this assessment. However, once things normalize, those factors might not be major players, all right? And your results might be significantly different. So for me, as an economist, reading through this particular article and the factors they focused on and the timing of the work itself, I'm not too surprised about the outcome. How sustainable would those attractiveness be over the next year or two? I think other factors might become more prominent, and the results might be a bit different in terms of attractiveness.
You talk about sustainability of these favorable factors that got Ghana to this #1 investment destination in the sub-region and the #6 on the continent. What do you think can be done to sustain these favorable factors? Dr. Bamfo.
Thank you, Mr. Kansi. I think we're on the right track. Right from the past 4, 5 years, I think we've been pretty consistent up until the pandemic in terms of our sustained economic growth rate of above 6%. The whole idea is to have a sustained high economic growth rate. And that means that we should have both domestic investments through this one district, one factory policy that is supposed to improve our industrialization agenda, and also create an enable environment for foreign direct investors to come in and invest in critical areas that will also help spur the economy along. So I think we're on the right track. Clearly, the pandemic threw us off a little bit. We also have the debt burden that we need to deal with, which the pandemic hasn't helped. But aside from the debt burden, all the macro indicators clearly show that we are going to bounce back. Inflation is around a single digit. Exchange rate have been pretty stable. And then we are continuing to diversify and not being over dependent on the export of primary products. And as long as we still have good infrastructural development going on and create an enabling environment, we'll be able to sustain this high performance and continue to be an attractive destination for investors in Africa.